Welcome back to the Daily Hunt. I'm Henry. I am an investor and trader. Okay, I'm a swing trader. I'm currently in the US Investing Championship and I've generated around 85% year to date in stocks. And this is my daily show. This is where I discuss my broad market analysis and insights, my opinions on the situations that we're currently facing, and I'll give you guys a bit of an insight into how I'm positioning myself and managing situations that are currently happening. Okay. Yesterday we covered the S&P 500 as a potential bounce, and we covered crypto and the kind of situation there as well, where we're seeing that bounce around 106 on Bitcoin and going into CPI data. We've also had some current events that have happened with Trump placing sanctions against Russia. We've seen a number of different things that have happened during the course of the last 10 days. The main thing to focus here is CPI data coming out today and the way the market interprets that and whether we're going to get interest rates reduced on the 29th. We've had earnings. Intel came out yesterday. It was fairly strong and moved quite well. But then we've had Tesla and Netflix not do so well. So we're kind of getting a mixed bag of earnings as well. And that'll bring in some volatility to this month, as I've discussed in the previous videos. But let's get right into it. I want to just look at the charts right now and discuss the current situation with the S&P 500, and then we can go into crypto and commodities. A breakout, okay? And that'll be a key breakout going back into the structure that we had, the channel. And I think then we can kind of build some serious momentum. We saw some buying yesterday, but we've seen selling in the previous day. So we're experiencing volatility at the moment. One day up, one day down, couple of days up, couple of days down. There's no real direction yet in the markets, and that's where that kind of choppy market will really eat away at your account. If you're a long-term investor, maybe not so much because you can kind of hold through. But if you're a swing trader, if you're a day trader, that will be eating away at your profits. It's done that with me a little bit. I was up around 106% a couple of weeks ago, and we've kind of dropped a little bit in the last 2 weeks. Now, this is the key pivot point. We break up to new all-time highs, and then we move, I think, to around 6.8. That's my opinion if we break up. Now, if we don't, and we break the recent lows around this level, I think we have a high probability that we then end up going to a lower low and then get that 5% drop that I've mentioned a few times here on my channel. This is what I'm expecting. This is how I'm managing the situations at the moment in the markets. I am predominantly cash right now, so I'm holding I'd say about 80% cash, 20% invested. And then in crypto, I'm 100% cash. And I've been 100% cash in crypto since the 22nd of September. So I haven't actually faced any drawdown due to the volatility that we experienced on the 10th of October. And I've shared this over the course of the last few weeks on the channel, but as well as my Discord group and other social medias. Now, this is something to monitor. Those are the two zones. I already mentioned it. We have to watch those zones for the break up or down, okay? Very, very crucial here that we decide during this period, maybe the next few days. Today might be a decisive day because of the CPI data, but I think the real decisive event will be the Fed interest rate decision. This will be a precursor, a warm-up to that event. NASDAQ, again, I'm looking for that break above for me to really feel like we're going to get a move higher in the markets. The kind of the break below this level, and if we can draw this trend line here, this level will be key as well. Okay, so we're kind of monitoring now multiple levels and zones that I think algorithms are buying, and these are kind of the levels that we're looking at. So even if we break above, we still have this resistance on the 25.6 level. So it could be a dull market. It could be with a number of kind of fake outs, and it could end up being a very similar setup, like I've mentioned before, to November, December of last year, with Wyckoff distributions and signs that we're going to go bullish, and then sell-offs, maybe some unexpected events, and we are seeing that already this month with a number of different events that have happened geopolitically and economically for the US and globally. The Russell very similar here, slight consolidation. So we're kind of looking at breakup above this level. I mean, I draw them on the daily, but you can go down on the 1 hourly or the 4 hourly or the 8 hourly, whatever hourly you want to go, and you can kind of see that structure developing there as well, as you can see here. Do you see? So it's a breakout of the lower time frames in reality. So that'll be the kind of the bullish momentum there will kick in around that level, and that will take small caps, growth stocks to a new level. We've already broken all-time highs, and I've always expected this year that we would probably get around, I thought maybe around 30%. So maybe we move to 2,700 or even higher here. So very key moment right now in the markets. If I'm being completely honest with you guys, it is a 50-50 coin flip, and the way I see it is just keep on picking great stocks. Yesterday, I ended up buying Dave, and it's moved pretty well. We shared this in the community. I shared this on X as well, but we shared this in the community on the 20th as an idea that we could easily break up here. It looks quite nice. We've had this kind of multiple consolidation period here, and it could easily break up. Yes, it's a bit of a slow mover, but when it moves, it can do well. And we had a 10% gain yesterday. So again, if you're picking the right stocks, this market won't impact you whatsoever, right? If you're picking the right stocks, if you're scaling in and out of positions, like we did with Rigetti and QBTS and so on. So if you look at Rigetti and QBTS, it might look like we made the wrong decision, because now there's talks of the US government buying shares in Quantum or supporting the industry in some shape or form. But we traded this move around here, the 9th of September, all the way up to the high, and we sold for a 1-14, 1-13 risk-reward ratio. So we risked around 1 or 2%, and we've made 13%. It's a no-brainer to sell around that zone. We've let it dip, and now we'll go back in and buy again. So on the surface, it might look like we've actually done a stupid thing by selling, but we've sold at the right time, we bought at the right time, and now we're looking again to buy cheaper with a momentum coming in potentially, because this could be a fake momentum. Comes back down, consolidates, and then it builds up once they actually get the deal done. This is just a rumor. This is not actually anything serious. This is just a rumor here. And yes, we had a 9% day on Rigetti and 13% on QBTS, but that doesn't look secure to me. That's just an initial bounce. So there's no real reason to kind of regret these decisions that we're making. And again, it goes to show that if you're buying at the right time, selling at the right time, buying the right stocks, picking correctly, you'll be making money in the markets. It doesn't really matter what the markets are doing. It's just about knowing the kind of the general direction of the broader market with S&P and the NASDAQ and the Russell that I analyze here every day. So with the VIX, I mentioned yesterday that we are monitoring, or at least I am, whether we'll continue going down. And exactly what's happened yesterday is that break down below this trend line. So there is some confidence kicking in here and some complacency, and I want this to go down if we want the rest of the market to move up higher. We saw that bounce yesterday, but we need this to continue here, going lower for a number of weeks, and then to kind of move slowly down rather than rapidly, because that still creates volatility, the movements of up and down with high volatility. As you can see here, we want to create lower volatility, smaller moves down and up to be able to kind of build momentum for a new leg in the S&P 500 and the broader market. Okay, so if we want this kind of trend that we had early September to early October, we want lower volatility, and we don't want this up and down movement. We need stability. And I think that'll only come with today's data, interest rates on 29th, earnings season showing some positivity, and I think Trump clarifying what's happened with China with those tariffs related to rare earths. Okay, so I think that's S&P, that's the broader market. If you guys want to see my watch list, I did share Dave in my community, both in the novice trader community, which is the beginner traders that just want to see kind of my watch list and what I'm looking at, as well as my insights and analysis throughout the day. I shared that as one of my top ideas, and I'll show you guys here just to make sure that you can see that this is what we do in our community. I end up sharing ideas all the time. I'm going to show you right now. Okay, here you go. Where is Dave? Dave. Right, there you go. So if you go on the community, you'll get to see that, look, top idea on 20th of October, we shared day 1 to 4, and this is what the chart was looking like before we shared it. All right, and then now I'll show you what the chart looks like now. Okay, so 20th of September, we shared this as a top idea. Now, this is not the only idea we share here. We've shared a number of other ideas. These are discussions that we've had with the community members. Other ideas that I've shared recently that have moved really, really well are Rigetti and a number of other ones, okay? So if we go to Dave now, you saw what it looks like when we shared it. Since then, we've seen a 15% gain, and we now have that breakout potential to move up for that 1 to 4 that I discussed in the Discord group. And that is just the novice trader community, which is only £15 a month. The link is below in the description of the video. Now, there is a different level to the community as well, which is the apprentice trader. That requires you guys learning my strategy. And there's a buy-in fee for that and a slightly higher fee, but you're going to get complete transparency as to when I buy and what I buy and when I sell. So you get everything. Okay, that's a different level, but I recommend to everybody go in as a novice trader, have a look at what I look at every day, my watch list and everything else, and then you can decide for yourself whether you want to invest a little bit more and get to see all of my trades with complete transparency. Okay, so that stock's done. I want to cover now crypto. We're seeing some nice build up here on crypto. I mentioned it yesterday that I really like that we are finding support. Okay, we hit that 100 level. We're now creating these higher highs, higher lows. What we need to create, and it's very, very important, is a higher high. So we have a lower high. We now need to break this zone. This is me just simplifying it for you guys here listening, but it's a lot more complicated than that. But the simple way that I can explain it is we need to break this level. Okay, we need to break 111, 112, build up some momentum, and then there is this resistance around 115 and then 118. I mentioned it in yesterday's video, but we're seeing positive signs here, and the build up is quite nice for that November, late October, early November move that I've been discussing here on my channel for the last month or so. That's exactly what I'm waiting for. Now, if we reject here, you know where it goes. We go back down, and I think this time we have to go down to 100 or 98. Okay, there's this 98 and 100 zone. This is what I'm seeing. This is what I'm looking at. Positives I've mentioned a number of times are the RSI around this level. It tends to build up around this level, as you can see here. 1, 2, we get nice little trends developing around this level. Not all the time, but the probabilities are in our favor that we're going to end up seeing a bit of a trend developing from these levels. And it's happened before, as you can see here, around that kind of like 42 level to around 36. We end up seeing nice bounces, which then end up being a bit of a momentum move in the market overall. Ethereum, and then I'm going to go and look at Bitcoin dominance and how I see that as well. As you can see here today, we have lower dominance for Bitcoin. That is a positive for alts. It's purely based on the fact that Ethereum has gained 2.7% and Bitcoin has gained 1.2 today. There's a key pivot point for Ethereum, and we've mentioned it before. It's this midpoint on the channel, the dotted line, midpoint on the channel. Okay, we want that to break. And that could be an early buy for me. That'll be an initial position that I might take. And then you know, I can scale here on the resistance with a little bit of a dip. I can scale back in, but not back in, but scale in, and be positioned fully for that move to 5,700. That's what I'm waiting for, and that's what I'm looking at in terms of Ethereum. We are getting close to kind of a decision in the markets, but this is the key pivot point that I want to break before I end up positioning myself in Ethereum. And bear in mind, guys, I have bought Ethereum since K this year, so you know we've made some very, very nice profits here on the swings up. Break even here, break even trade here again. We didn't get to trade the short, and now we're trying to build up again that momentum and see whether we break here. And this now changes into kind of something like this, okay? Because this was kind of a key, volatile moment, and now we kind of have this wedge, a decisive wedge, in my opinion, where we either break above the midpoint of the channel and the wedge, or we come back down below and we break under the channel and then we move all the way down to here. So there's a key decisive moment here for the market that I'm letting the market do the hard work. So I always let the market do the hard work. I don't care for bottom picking. I don't care for predicting 100% probability of this hitting this level or that target. I just care about the middle of this move. The move might be 50%. If I can make 40, I'm happy. The move might be 100, and if I can make 80, I'm happy. I don't care about the tops and the bottoms. I just want to make sure that I preserve my edge in the market and trade with my probability. So just keep 50% above 50% win rate, and keep my risk rewards quite high. 1 to 2, 1 to 3. That's what I care about. I don't care about any of the other, you know, bottom picking, predicting, things like that. This is me just giving you clarity on how I see the market with these videos, but that's how I operate. Okay, so that's Ethereum. Link is something that I was looking at, and EVAX. Link just needs a bit more time, I think. This 10th of October day was what I would call probably a nuking of the crypto market. It just literally nuked the whole market. The stories of loads of traders and investors being liquidated, not just the ones that had leverage, even spot traders that might have had a stop loss. It was a big event for the market. Okay, Bitcoin dominance is something that I think I want to cover today. We haven't covered it in a few days just because there's sometimes no need. But Bitcoin dominance is quite important. We're going to be covering that now. Right. So something that I've been saying for a while is, if we go on the monthly, and this is very important, for me, the monthly, I wanted to see this bounce. So we had 2 months of selling off or Bitcoin dominance dropping, and we needed to see Bitcoin dominance move back up here. It's hit this key level, which I thought was going to be 61, kind of went a little bit higher to to 63, 64 because of the unexpected volatility and the event of the 10th. But from here, we are in a situation where we can really build an alt season. This is why I think November is key. We can really build here for alts to perform well. Now, whether we get a gap, some sort of fill around this wick, and we go all the way up here again before that happens, or we get it straight away, I don't know, and I'm working on that every day, trying to figure out what the markets will do. This is the reason why I do these daily shows, because I want to give you guys clarity on what I'm thinking and how I'm looking at the markets and making decisions. But the key here is we break under 59 again, under 60 again, we are going short on Bitcoin in the sense that we will be prioritizing altcoins. I think altcoins will do really well. And we are going a little bit more aggressive on altcoins. Okay. If that doesn't happen, then we could be seeing altcoins suffering with Bitcoin still gaining, or a little bit of, more dominance with Bitcoin. So maybe we position ourselves more aggressively in Bitcoin. We have to see. But personally, I think without getting that break below 50, very, very difficult for the markets to move in that direction. If we see the weekly here, maybe we go to 60, get a rejection around this 20 MA level, and then we move back down to 54 and the other levels. Okay, we need to move down here. We need the market to have capital circulating into alts for us to get an alt season. There's other things that I've seen some of the community members talk about, USDT dominance. There's also, I think there was the others chart as well, comparing that. But personally, this is the problem. So, and I'll go into the dollar as well. The dollar looks like it might strengthen. Logically speaking, it should strengthen a little bit. So if the dollar strengthens, our alts and our crypto is going to move up or down. The probabilities are that we're going to move down. Okay. This is why I'm being so cautious here. I'm very, very careful with my decision making, just waiting for the market to do the hard work and decide for me. There is no pressure for me to buy. There's no pressure for me to trade crypto. We're making money in stocks and picking the right stocks, and we're going to try and time crypto at the perfect time for that alt season, if we even have it. Okay, if we even have it, and because we could easily go short. So the dollar doesn't really make me feel confident that we end up going long on crypto. I think the dollar, we could see a break up here, especially after this kind of consolidation that we've seen, a bit of a head and shoulder pattern on the weekly. We have, temporarily we could see a little bit of a drop on the dollar and then a rise up again. But on the weekly, it does not give me confidence here. And I might be wrong. Again, this is me just kind of running through discussing my thoughts with you guys, so that you can so you understand what I'm looking at. But yeah, here you go. This is the situation now. On the monthly, we can see USDT suffering a little bit, but USDT's always had a rise just because there's more being created. And on the monthly, it looks like it's on the verge of breaking that 50 level on the RSI, showing some strength and the relative strength coming in here. You have to be very, very careful, okay? This is a key moment in crypto. I think I'll leave it with that. I mean, there'll be other things that we can cover in other days that we do the analysis. This is the last day of this week. I'm going to try and do soon a weekly show, so you're going to get more insights there as well. We'll be talking more about the macros and the fundamentals there. Okay, so that's crypto done. We're going to be going to the dollar. So I've been talking about the dollar for a while, how I see Dixie moving above 99, maybe even 100 here for that break all the way up to 101. And this is what I'm monitoring really, really carefully here. Again, this is kind of a decisive moment for the markets. Gold, I keep saying that the short side is where the money is. I hope you guys have been able to take advantage of the idea that I shared about 5 days ago on the short side. We are still short here on gold. I think we can go down up to 5%, 9 to 10% on this move from the moment I entered, which was 4325. But the other thing that you have to think about is, logically speaking, we at least need to eat around 20 to 40% of this move that we saw from August to the peak. So that would take us maybe around here. Okay. The short side looks okay. We could see some support around this okay level. If that breaks, we then go all the way down to 3.9, 3.8, and we can easily make that 8% on this move. Easy trade. I shared it with you guys 5 days ago. There was no way this was pushing higher, especially with the way it was looking on the monthly. I mean, that doesn't give me any confidence that we can go higher. Yes, the market could be euphoric and move higher, but I think logically speaking, it will have to revert to the mean at some point. And this was the key point that I saw, at least to a certain level, revert to some sort of mean, which is that 4K 3.9, 3.8 level. Okay, that's gold. We've seen bonds, the 10-year bond, show a little bit of signs that it could regain here. It's been on a downward trajectory for a while here. Let's just look at the charts. And I'd say maybe we resist there, go back down, and it kind of like slowly builds up to around that mid-November, end November level where we can see the breakout above. But it looks like bonds will break up above, and that will have an impact on the broader market in many, many different ways. And maybe I'll cover that in a different video and discuss that in detail. In terms of the other markets, you're talking about the German market, the French market, consolidating here, the German market. So nothing really to see or trade. The CAC 40 was doing pretty well. I showed you guys LVMH or MC, ticker MC. That's been doing pretty well. We just haven't been looking at it. I haven't been looking at the French market because we've seen so many good opportunities in the US market, especially with quantum plays and AI. We also have the Chinese market, Hang Seng, the Hong Kong, sorry. This is on the verge of a break above here, and I am looking at a few ideas. This includes rebuying Alibaba, which we had in the run-up in the previous trade, which was this one. Baidu, which we had as well. I'm looking at Baidu as well as an opportunity, and maybe a number of other ones. Maybe we can look at JD as well to see what JD's. But I like Alibaba. That kind of covers the core of the Chinese market. It's one of the biggest companies, or the biggest company. Baidu, there you go. We're looking for that kind of to curl upwards and show some signs here. Natural gas, I mentioned that it could be a good opportunity, but we're seeing a bit of a sell-off yesterday. Looks okay to me. Nothing really to worry about. The kind of volatility that you see in commodities is quite typical. Then we have US oil, which saw this spike up because of sanctions against Russia. I did draw here what I thought would happen, something like this. I think it should consolidate and then maybe build up momentum for the new year. I don't think there's any other things I want to cover. There is one idea that I think could be quite nice, which is this one. I think this could be quite nice for a breakup above. It's a 1 to 6 for that retest of this zone. And it's a semiconductor, so we would have to see semiconductors doing well. But yeah, this is a nice idea we're looking at in my Discord group. It's not yet ready, so I haven't really shared it as a top idea, but it's getting there. It's quite ready. It's nice price tightening here. There is the risk because of this kind of ascending channel that it's creating. There is a risk of resistance around this level here, and the risk of this breaking below and create a new lower low. Okay, there is that risk here. And if we look at the weekly, something like this. So the weekly looks quite nice because we've had this initial move, and this could be the second trend on the weekly, but it also means that we could go maybe for another dip, consolidate a little bit longer, then go down. So there is that risk there. Just showing you guys what the risks are and the reason why I haven't bought yet. I'm not seeing clear momentum in the broader market, but it's one of the best ideas I've seen so far. And there are other ones, of course, that we're looking to trade, but I just thought I'd share this with you guys here on YouTube. Okay, that's it for today. Thank you very much for staying this throughout this video. Please go and subscribe and follow me on all social medias. That's TikTok, Instagram, and X. I'm trying to share a lot more on X there. I don't have a lot of time to share stuff, but I try my best to share some ideas and some of my thoughts throughout the day in X. And also, if you're interested in seeing my watch list, looking at other insights and analysis I have throughout the day, discussing ideas with me, whatever it might be, you can join the Discord group for only £15 a month. The link is below in the description of this video. All the links for the social medias are going to be below as well. So you can go and follow me on all of these social medias and get to see the shorts and clips and other insights I provide online. Take care. Bye-bye.